Good morning, everyone, and welcome back to Morning Markets from the team at True Potential. Many thanks as well to those who have been subscribing on the YouTube channel. For those that haven't, it's very easy and straightforward. Just click that subscribe button. Just looking at asset markets then, looking back to what happened in equity markets and broader asset markets on Friday, quite an interesting day of developments and very much revolving around the US jobs report and how that impacted sentiment. If we look at equity markets over the course of last week, the majority are at or within touching distance back to those all-time highs that we discussed a number of weeks ago. I think the other thing really to focus in on then is the US jobs report. And if we cast our minds back to just 4 weeks ago when we were discussing and looking forward to the report for April, there was that expectation that some 1 million or close to 1 million jobs would have been created in the US. As we know, it was very wide of the mark when actually the data was delivered, and we saw in the region of about 280,000 jobs being created. So moving into May, there was really an expectation that we would see an improvement from those figures for April. That was duly delivered with some 560,000 jobs being created in the US economy. But interestingly, and very much like last month, that was below expectations. As a result, and we did see then on Friday, we saw the US 10-year bond yield move in quite a bit over the course of the day. I think some 7 basis points, so closing the day back in the 150 levels at 156, a level that we haven't seen for quite a number of weeks. And just really, I suppose, reiterating this view, this push and pull that we're seeing within the data at the moment, with strong underlying data coming through. If we think about the PMIs that we discussed last week, we think about what we're seeing in terms of trade, what we're seeing in certain other sectors of the economy, but really that's not feeding into that strength as of yet in employment. Yes, we've come a long way, but still a long way to go. And I think that really influence market participant thinking around what action the Federal Reserve will be taking going forward. Clearly, we've had this discussion about, are they going to reduce the support? Are they going to taper that support that they are offering to the market? And that's being discussed, but what this data is showing is that there's still a long way to go to get the employment situation recovered back to the levels that we saw pre-COVID-19. As we know, the Fed are focused on their dual mandate of yes, inflation as an average inflation target, but also on the employment side of things, and these employment numbers are certainly giving support to that thesis that the Federal Reserve will remain on the sidelines for a little bit longer. I think then on the other thing I just wanted to touch on was just the development over the weekend with the G7 finance ministers reaching agreement to bring in principle a reform of the global corporate tax system, which would see a minimum of a 15% tax rate for global companies. Now that's something that will be set in motion a number of discussions aimed at ensuring all companies are paying that appropriate tax level, but that will take a long time. But interestingly, we've now got to this stage where there is agreement at a minimum 15%, and now we'll have to look into the detail as to how that's implemented. I'll leave it there for today. Please do join us again tomorrow. Many thanks.